Hi, and welcome to Web3 Unfiltered, where we go beyond hype to explore the systems that actually shape financial and digital infrastructure. I am your host, Colin Sodabi. Today's guest is Tunji Abass, a finance mentor and founder of the 2G community, a modern finance gym for first generation wealth builders. Tunji's work combines military grade discipline, private market exposure, and procurement strategy to teach ambitious earners and founders how to move beyond reactive money habits and install structured financial frameworks that compound over time. While Web3 is often talked about as the new frontier for finance, success in digital assets, crypto, or even decentralized finance still requires strong fundamentals. Discipline, repeatable systems, and long horizon decision making are as important as understanding tokens or smart contracts. Today, we'll explore how first generation builders can create wealth architecture that survives the noise, scales across markets, and positions them for generational impact. Welcome to the show, Tunji. How are you doing today?
Thank you for having me, Collins. I'm pretty good, and I'm honored to be here.
You are very welcome, Tunji. It is a great honor to have you on the show with us today. So, I like to ask my guests first to talk about themselves. What is your story? How did you get involved in what you're doing today?
For me, it's a very complicated, I would say complicated process, but yeah, I can sum it up here pretty quickly. So I grew up around entrepreneurs, and I had early exposure to real estate through my family. But I also watched what happens when success depends on one person. So no succession plan, no systems, and everything slows down when they're not there. So ultimately, it led me to joining the Air Force, and I fell into working government contracts. So in that world, I learned a different way of thinking. So just from structure, risk control, and a mission that continues even when people rotate out. So 2G is my attempt to give, first generation wealth builders, what most of us never get. A clear framework for stewardship, discipline, and private market thinking without the jargon, hype, or emotional decision making.
It is amazing how your experience has shaped your perspective about finance and led you to establish disciplined systems. So tell me, Tunji, in your opinion, why do first generation earners fail without disciplined systems, even if they make good income and so much money?
That's a really good question. And how that I would say applies to me, especially from having that firsthand experience, when you are a first generation person that's again creating, trying to cultivate something, from scratch, you don't really have much margin for error. And like I said, I can say that for again directly for myself, I didn't have much margin for error. And by trying to figure things out along the way, again, taking, I would say, trusted but also bad advice, you end up making mistakes. And usually, again, for some people, making a mistake can be pretty minimal. It can be I would say like a 5 cents mistake. But when you are someone that's in that first generation, or someone that again that doesn't have much margin for error, that 5 cents mistake could feel like $5,000 to $10,000 mistake, right? So you want to minimize how many, again, how things are impacting you that will affect your momentum. And in this, I would say in the part two to that is ultimately it's very easy to make money one time, but it's not easy to have a repeatable system if you don't know what to do. So again, two things that I've lived from a very firsthand experience, and again, I just wanted to be able to close that gap.
So it's not a math problem, it's actually a structural one. You're saying that without a framework, income is just a temporary state. This leads me to your concept of financial architecture. There obviously is a functional difference between someone with reactive money habits and someone who has installed structured systems. This also takes me back to your comment on repeatable systems. How does that repeatable systems thinking turn a monthly salary into long term wealth? Is it about the money saved or the frequency of the process?
That's a good question. And I would like to kind of tie it back to, I'd say most importantly, where I really learned how to make things repeatable. And it was from my, again, military experience. So when you're in an environment where you know people are constantly going to rotate in and out, by definition, you have to have a plan in place to ensure that the mission that's happening locally doesn't stop because that person's overseas. So the same thing applies in a investment standpoint. So when you are so I would say in two ways. The first part, again, is just one, having that repeatable process that's going to happen regardless of how you feel about it. You remove the emotion, and in the context of what happens if you as the individual are not involved. So again, two things. So again, removing the emotion, the emotional aspect, and also ensuring that you are, again, still having those things done regardless of whether or not you're involved. So those are the things we love to help people create and focus on for that reason.
So, the operational reality here is that the process is the product. You need to remove the emotional aspects of it and make sure that the system continually runs whether or not you are directly or indirectly involved in it at any point in time. If the system is repeatable, then the action becomes predictable. As a first generation builder, you would agree with me that first generation builders often carry a lot of mental baggage. So, what are the common misconceptions that these builders have that often prevents them from installing these systems in the first place?
I would say one of the common misconceptions is, people, I would say it applies to, I would say the buzzword hustle. And some people think that just because, you may have had to work harder, to be able to earn something means gives you an intrinsic edge that requires context. So I'd say that matters more I'd say it's most applicable to something a little bit more, I would say not as arbitrary, like playing a sport. Have been put into uncomfortable situations, and ultimately that helped me be able to perform better in that particular arena. When it comes into finance, that is not necessarily the case because, again, hard work does not necessarily translate into you earning more. I mean, there are billions of people on this planet that work harder than the average person that does a job as an analyst on Wall Street, but by that definition of them working hard, they should be earning more. But we see that's not true. So again, hustle, again, having the mentality to be able to work hard is important. However, what's most important is being able to have something working independent of you, and ultimately being able to generate more based on that independence.
So, essentially, one should have a system that works independent of the person's direct involvement. Many will call that a work while you sleep strategy. Okay, so now let's talk about the 2G community. You founded the 2G community as a finance gym. In practical terms, what does a workout session in a finance gym look like? How do you get people to build repeatable systems?
That's a great question, and I want to actually give a little bit more context, especially when we say that define finance gym as it applies to what I've cultivated. So I'll tell you what it's not first. So it's not a trading group. It's not a just high driven finance tactics club, and it's not a motivational mastermind. It's just a structured environment where individuals learn how to think, operate, and deploy their capital with discipline, clarity, and repeatability. That's what we do. So I would say in even more simplest terms, we practice a lot of scenarios, again, without judgment. And more than anything, people are learning how to apply certain, again, systems and values to where they are presently in their life. So, we don't want anyone to be in that, that figure speech of trying to put a square peg into a round hole, or even trying to cut the square to fit into the circle. We want to make sure that, again, what someone is learning, they are cultivating it how it actually applies to them. And that's probably more important than anything, because that lets people be able to know how to make informed decisions, so that they're not making expensive mistakes along the way.
All right, thank you so much, Tunji. I like that analogy because it implies that wealth is a muscle that is built over time with resistance and work. Now, this leads me to my next question. Can you shed more light on cash flow allocation, risk filtration, and private market exposure, and also elucidate on how they work together?
That's a really great question. And that is what I've been wanting to really demystify. Because again, when most people see, let's say, for example, some people might see that, that marketing ad that shows up on their, social media feed. Oh, hey, come learn, hey, come do this and you'll earn this, right? Again, they're not seeing the context of how that applies to their particular situation. And the person that's actually creating that ad is under the assumption that who they're bringing in already understands what's going on. How, and so to be more specific, again, what's the downside to this particular situation? Just it could be anything. I could say, let's just say real estate, just something common. What's the downside to this particular deal? How soon does a person get paid? How, again, when, how do they get paid? Who's taking on the most risk? So those are the things that, again, when people market things, they're doing it with the assumption that someone knows what they're getting into. More often than not, they don't. And we want to be able to make sure that people understand what it is that they're doing, so they're not, again, feeling, they're not just doing things just based on reaction, or, again, something that's just emotional. And normally, more often than not, that's where the problems. So I had most people have, I would say, polarizing experiences. Not because anything that person that gave them the product did wrong, but they didn't know what they were getting into. They didn't understand fully what that particular investment or situation looked like. So when you understand what it is that you're seeing and take out, again, a lot of the jargon and all those other different things, and look at it from what it is at its core, in simplest form, you can make an informed decision. That's when you can move quickly assessing things. And that's what we ultimately want people to be able to do.
That is a very uncomfortable truth, especially for people who are used to reactive spending. Now, you've talked about repeatable systems. You've given a few other strategies. How do you ensure that these structures or these systems are durable and not just dependent on individual motivation or luck?
That's another great question. And I will say, I'll start off with the buzzword, but again, I'm not the one to put all my eggs in one basket, so to speak. So one part, again, is AI. We like to have automation, again, in terms of operation things that don't necessarily require the human input, because again, it's very data driven. It's analytical. It's literally putting things in, right? However, we don't solely depend on that because, again, AI is imperfect. It still needs the human touch. So we like to have the best of both worlds when it comes to our organizational structure. We, again, optimize artificial intelligence from inputting data, but we still have the human oversight for quality assurance and, ultimately engaging when necessary across all forms of products that that we use. So again, I think it's best to have the best of both worlds. Again, some people like to say, hey, I left all my employees aside and I like to use AI only. I can speak for myself and say that's not true. I still personally, I still need to have that human element that's, again, verifying things. And that's something, another thing I learned from being in the military: always trust but verify. So we don't take that for granted, and it's just a part of our ethos.
Always trust but verify. Noted. You just drew my attention back to your military grade discipline. So, what lessons from military grade or procurement systems are relevant for everyday investors? Because we live in a world today of one-click investments and instant gratification. So, how does discipline technically outperform motivation when it comes to compounding wealth?
That's a really great question. especially because it's just something that's become ingrained in me. So I could tell you with simplicity, I would say one of our edges is always accounting for contingencies. So again, one particular thing that's always stuck for me, from my time, was the fact that, the perfect contract is one modification away. So we know change is inevitable. Something's going to change, something's going to adjust. So it doesn't matter what you did the first time, as much as, you want to be able to do things right. However, even if you did everything right, something may still need to be adjusted. Something's going to change. So we like to always plan for scenarios, different things. What happens if this happens? We like to account for things because we want to minimize the surprise. Again, we can't prevent something from happening, but we can allow ourselves to be ready for whatever comes, right? So it's just not being taken by surprise, because normally, again, when you are, that's usually, again, when the emotional element, of us as humans, can become an overriding setting. So we want to keep that to a minimum by always just doing our best to be prepared.
Thanks for articulating that very well. I'm curious to know though, how do you build repeatable systems that give second generation outcome even with no inherited capital?
That's an important question, because what we like to focus on is giving people accessibility. More often than not, again, a lot of people are usually, run into those walls because they're, too big, they're too big for, simple financial investments, again, in terms of, they don't want to just do something in I would say for most people in the States, they don't want to just invest in a 401k and have to wait until they're 65 or what have you to be able to actually be able to benefit from it. And then of course you have the other side of that too, where they're small, they're not big enough to be accepted by an investment bank. So for what we aim to introduce people to, because I would say ultimately it's the parent organization of, Tunji, which is Sunny Haven, is give people the understanding first and the means to how to access, again, private markets that are in trading, real estate, business acquisition, and of course, lending. However, again, we ensure that it is something that is accessible for where they're at. So we're not trying to necessarily make it, I would say, make things, again, we don't want things to be too high, but again, we make sure that, again, it's accessible and it's also worthwhile to their capital that they put in. Because because at the end of the day, if you're not able to do things at scale when it comes to certain things, it's just going to be able to take longer overall as a whole. Because we do respect timing. However, we also most importantly want people to be prepared for it. So again, when people aren't prepared, that's usually when their expectations are not aligned. So we ensure we have the alignment first before we jump into the overarching investments.
Absolutely brilliant, Tunji. The finance gym approach is grounded in traditional discipline, but here on Web3 Unfiltered, we want to dissect a bit of how it applies to emerging markets. In Web3, the rules are 10 times faster, and the volatility can wipe out a disciplined 10% allocation in hours. So, how can first generation builders approach new financial opportunities like digital assets, online investments, or tokenized markets without getting overwhelmed?
I really love that question, because this is something I wish I had known when I first started. And, a lot of times I've seen it, but again, and this is where, again, I would say most organizations I would say, I don't want to necessarily say they have it wrong, but I would say more so the individual, this is where they usually get, again, the misaligned experience. So when it comes to, again, being in that starting point, especially if you haven't had the proper, again, I would say build up to get to that point. It's something I repeat all the time. Mindset, framework, strategy, then execution. In that order. Out of order is what you have, it creates, again, people just selling you tactics, or they'll just sell you, or they might just give you the mindset, but they don't give you, what comes after that. Again, the order matters, because again, we want to ensure that when a person starts, because emotions, they're inevitable, right? We want people to, again, be empowered by what it is that they're pursuing or doing. However, we know that, life's a marathon. Things happen, things change, and, you have to be able to ride that wave balanced, right? Because everything ebbs and flows, and we feel when we focus on those, the mindset, framework, strategy, execution in order, that is how success is inevitable. Not just one time, but over time, repeatable.
Mindsets, framework, strategy, execution, in that order. Thank you so much. Noted. Still on emerging markets and the 2G community, what lessons from the finance gym applies to emerging markets of today?
Great question. To be honest, what's most important, again, is even out of those four, I go back to the first two again, the mindset and the framework. Because more often than not, some things, especially when it applies to emerging markets, and that happens a lot, especially when it comes to trade and real estate, we don't see the return right away. So by definition, again, you have to be ready. You have to be ready to withstand, the time horizon. So one, mindset, and again, back to your mindset and the framework, knowing how long certain things are expected to take. Can it be sooner? Absolutely. Could it take longer than we realize? That happens more often than we think, right? So we want to be able to ensure that as it applies to anything, and this is just back to those first principles when it comes to the mindset and framework, you never invest anything that you cannot afford to lose. And we help people identify what they cannot afford to lose. So again, that's just I would say in simplest terms, it's just that piece of capital that that you're always going to need on a day-to-day basis. So that's paying your bills, paying your rent, mortgage, or whatever that may be, food costs, that's not the thing you should be investing in an emerging market, right? So we want to make sure that, again, people are aware of what it is that they're doing, so that, again, their regular day-to-day life is not going to be affected by an opportunity that presents itself.
Never invest what you cannot afford to lose. I think that's one of the first lessons anyone should know about finance or investing. Well, are there any lessons from traditional wealth building that apply directly to navigating digital or online investment ecosystems?
I still say there's a direct correlation. And, again, it more or less, again, ties with the, those first principles that, that I mentioned. We want to ensure that the tactic isn't overriding the governance. So again, people understanding what it is that aligns with their value system, because more often than not, tactics are, just getting tactics alone is what I would say, it's gambling. And again, you can always win one time. I'm an optimist. I love to win, but at the same time, in the same token, is it repeatable? And again, if someone goes to the casino, they can play blackjack and win one time, but what happens when you go again and you lose? Did you bet it all on the house, or on black, or whatever you name the game, whatever it is, right? So we want to ensure that what they're doing is going to be in alignment with what it is that they already know works for them. So we go back to those first principles all the time. So those things, they matter more than people realize.
I think I speak from experience when I say I agree with you. Whatever system you're able to win from today, or whatever you're able to win from today, you should be able to win from it tomorrow and the day after that, and continuously. That is one of the ways you show and apply repeatable systems. So, Tunji, do you have any final notes for our listeners before we wrap up the episode?
There's one thing I do want to guarantee again to your listeners, especially if they're curious more about what 2G is, and this is what I will guarantee. We will help you align your thoughts, actions, and your capital decisions, not returns. So again, we don't control returns, but what's most important again, your thoughts, actions, and your decisions. Making sure those are in alignment more than anything else, and because that's what's most important in the long term.
I tried as much as possible to hold back on this question until the final part of the show. So here goes. How can one join the 2G community?
That's a great question. And the best place you can do that is going to tunjiabass.com. That is the best starting point. We are making a few little tweaks to everything. So it's actually going to be going live officially Monday, March 1st. However, you put your information in, of course, in there. We'll be quick to keep you in the loop, especially when things go live and they're ready. So again, don't let the inaction discourage you. I'm ready to have people inside of the community today, but we want people to have this just a first class experience. So again, we're just making sure that everything is just. My expectations are high for it, and ultimately I want everyone to enjoy what it is that they're going to be getting, ultimately in the value that's being provided.
I hope I'll be able to join this community. I personally will be giving it a shot, and I'll see you in the 2G community.
Oh, please come on in. Love to have you.
All right then. Thank you so much. I'll see you there. So, that wraps up today's episode of Web3 Unfiltered. A big thank you to Tunji Abass for sharing how first-generation earners can build structured financial systems that turn income into legacy, and how those same principles apply in traditional and Web3 markets. If you found this episode valuable, do not forget to share with your network and subscribe to Web3 Unfiltered so you never miss an insight. Until next time, stay sharp, stay curious, and keep building.